Right, everyone, welcome to the public stock market update, and you're going to love this. Right, the S&P's hit 5,000 for the first time, which is great for my pension and savings. Obviously, your IFA hates this because they're going to have to explain why your pension fund is doing so poorly and why they're so rubbish. Something I want to remind you of, the availability heuristic. It's a bias that causes individuals to overestimate the likelihood of events that are easily remembered. Now, what you're easily remembering at the moment is stock market hitting new highs. For those of you who follow me, obviously if you're looking at the UK markets, then you don't know what a new high is because you've not experienced it for a long time. But for those who are following me and have their pension in US equities, then you'll be thinking, oh, these things can carry on forever. No, we're not going to fall foul of the availability heuristic or even the overconfidence bias, given how easy things are at the moment. Speaking of, look at this. This is price, stock price to earnings, okay? And by the way, while I have got you here, couple of things. alpeshpatel.com/links. Make sure you have a look at that, will you? That's enough of my mug. Now, going back to this. Price, you're paying $26 for every forecasted dollar in profits in Apple. So what's cheap? Banks look cheap, energy looks cheap, but cheap is not the only measure. Valuation is not the only measure. So when people go, oh, why have you got Microsoft? Isn't it expensive? Yeah. But valuation is not the only measure of whether or not a stock price would rise. I mean, if you've read any Nobel Prize-winning economics literature at all, for God's sake, you would know that, wouldn't you? That's where you've got me for. Anyway, telecoms look cheap, and we'll come back to some of these. Some of these which look cheap, like Cisco, haven't been doing too well this past week, funnily enough. And some of them which are expensive are doing incredibly weak, which just goes to prove that it is not just value we need to look at, but growth and income and cash flow and Sortino and Alpha. Now, I'm rubbish at anagrams. Can you make me an anagram out of that, which isn't rude? VGISCA. How are things at the moment? How are you? Do you feel like how I feel? Which is pretty happy. S&P 500 kissed 5,000. Look at that. Yep. And the NASDAQ upwards and Microsoft ridiculously upwards. Apple is moving in this direction. Now, what should normally happen is this kind of squeeze and then move to the upside. Nvidia upwards. Meta, of course, blew the doors off. Alphabet that way. And who are you then? Amazon. Never heard of you. So do you see how it just then popped higher? It should eventually happen to the upside with Apple. And when will it happen? Probably got about at least a month before that happens. Now, that's that, but let's zoom in. By the way, do have a look at my LinkedIn, where you will see videos, quite a few that I've posted, of me talking about investing. All right? And the importance of doing those things right. Now, where are we so far this month? Unexpected for me, February has been an up month. On average, since 2020, it's still negative, but it's a surprisingly good month. I say surprising because I wasn't necessarily expecting it to be an up month on the basis that, a bit like September, it tends to be a pretty crap month, but it's been doing rather well. So there we are. And what are we going to look at? Value, growth, income, cash flow, momentum, Sortino, Alpha. Can somebody give me a anagram, a word which I can use for VGIC, momentum, Sortino, Alpha, please? Okay, thank you very much. Now, we're going to look at all of those factors, not just charts, obviously. So what's the past week been like? Oh, my word. Nvidia, come on, 10% up. Broadcom, 6% up. Alphabet, 3%. Meta, 20%. Eli Lilly, Amazon, CVX, come on. Apple. Okay, now, what's interesting, the ones which have done really well were the ones which were relatively expensive, although energy has done somewhat better, and banks. Now, I thought at the start of the year we're going to get some rotation into healthcare out of tech. In actual fact, healthcare and tech have both gone up. ETFs, the ones which are doing, of course, the ones which you might think, oh, wow, look, that's up 30%. Those are leveraged. So take care before you destroy your finances. Don't do leverage without understanding what the hell you're doing, any more than you'd play with explosives without knowing what you're doing. Don't play with explosives even if you know what you're doing. NASDAQ up 5.6% so far this year already, which means there's an 8-point gap between the UK markets and the NASDAQ already this year. And if you are a pensioner in the UK, your IFA at St. James's Place is probably trying to track that and give you 4.5% per annum. Okay, and I'll tell you something, I get 4.5% per annum just on my cash in a bank account at the moment with instant access. Wise, for instance, who have not sponsored this video. What's wrong with you, Wise? That's where that is, and that's where this is. That's already up that much, and the Dow is up 2.75. So it's been a good year to date already. I don't need to tell you that. Where is the moolah coming from? Well, communications is doing well, and technology is doing well, and as I said, healthcare is doing well. And those are things worth knowing. Financials, which were relatively cheap as well, have been pulling things in, and then you've got consumer staples, of course, coming in closely behind, and industrials, whatever industrials means. Now, what else has been driving it? Well, momentum. Valuation is not the only thing which moves stock prices. Momentum moves stock prices as well. So does the size of companies. So large cap, for instance, have been doing well, and growth companies have been doing well. Okay, so market size and momentum and growth. This is why we don't just say, unlike idiot IFAs, oh, well, we're going for just growth or just value or just income. So buy lots of funds which tick each one of those boxes. Oh, we'll better throw in some small caps and some emerging markets as well. They're idiots. Okay. Instead, we make sure we tick the value, growth, income, cash flow, Sortino box with every company. Not, well, this one ticks that, this one ticks that. What the hell does that help? So sometimes some will go up, others won't. No, I want everything to go up all the time. And that's the closest way of doing it. NASDAQ up 39% in the past year. If your pension's up 39%, that's because you were largely picking, well, you were on the Great Investments Program and you were largely picking NASDAQ companies. S&P up 20%. Okay, and the Dow up 13%. And of course, over the year, the UK market's at 4.5%, which is interesting because somebody showed me their St. James's Place annual pension report, and the guy had said, the IFA had said, or St. James's Place had said 4.5% is what we're tracking. They're tracking that. They're tracking you 4.5 frickin' percent. When you and I know your pension can get that, because you could just track a frickin' index tracker on that, let alone anything else. All that. So they're going to deliver in 5 years what you could have got in 1 year from that. You're going to have a really crap retirement if you were St. James's Place, is the only conclusion I can come to. Just waiting for their CEO to get in touch. NVIDIA, so which are the top ones? Well, that's one, as you know, we own. That. So it's not bad. Over the past month, 2 of our stocks have gone up just that much, and we own that. So we've got 3 out of the top 10. I will cover some of the others. I know Monolithic we've picked in the past as well, and I'm pretty sure Broadcom we've mentioned at some point somewhere. Ugh, whoa, look at those. That's not good. What a bad month for those. This is just the bottom top S&P. It's just the S&P. It's just for information. Okay. We don't need to look at Western Digital. It's not one I own. I'd previously put it in and I've forgotten to tell my team to remove it each week. It's just that it had been one purely on momentum, which had risen, and I was showing it just as an illustration of what can happen. And of course, what's happened, it's popped up since I mentioned it. But we don't own it. We don't plan to own it. It doesn't hit all our buttons. It just happened to be mentioned. And I must tell the team to stop showing it. I just want to show it 1 month. FTSE 350, I don't own any of these, but that's some of the ones which have done all right in the past month, and that's more like what most people will be achieving if they're in the UK markets on their pensions. So where's the S&P? How's it doing? That should continue up that way, which is the monthly MACD. Okay, so it should continue up that way and do rather nicely, and that should go there. My bullish case for this year for the S&P 500 is a 25% return on the S&P 500, right? Whereas on the FTSE 100, it is that it will flatline and continue stalling. And, you know, St. James's Place loves FTSE 100 because it makes them look good. They like ugly because they're even uglier. So in relative terms, they don't look as ugly. Whereas I prefer comparing myself to that. Yeah? I don't mind standing next to the Tom Cruise of the stock market, which is the S&P 500. Whereas your St. James's Place and pensions like that, they want to stand next to Ugly Betty because it makes them look a bit better. NASDAQ. That's rip-roaring. I mean, you tell me, when it does that in the past, like here, what happens to the NASDAQ? You tell me what happens. You know what happens. This is one of the sweet spot easy places. I said to a friend of mine who's seriously rich, and he's the one who helped develop pipspredator with me, and he lives in Dubai, but he's in London at the moment. I said to him, buy, this is not for you guys to do. I said, buy 3 times leverage ETF on NASDAQ. Put 100K into it, and when you double your money this year, thank me. Because he's got stupid money to do that with, and that's his risk appetite and the kind of thing he'd do. Apple, okay, that is the projection, and the problem is, that's the very bullish projection. My team's put that in because, anyway, they're insane. They put it in because I told them to put in a really crazy bullish projection, but the fact of the matter is at the moment it's just sideways. Now, would I buy more? No, I'd wait till Wednesday's broadcast. Do I continue holding what I've got? Yeah, of course I do, because I'm sitting on a big fat profit and I've got no reason to exit yet. Would I sell? No. If it drops X, I'll sell Y. If it drops X, I might even buy Y. But we'll see. I don't need to worry about either at the moment. Alphabet's just for the Great Investments Program only. Have a look at alpeshpatel.com/links. Okay, Microsoft. Still rising. It is a bit toppy. It will do this at some stage, but where we may have to make sure we avoid that kind of fall, which we did in 2022. But at the moment, nothing to worry about. So we wait. We'll worry about it when to sell. If it drops X, we'll worry about it then. Okay. Amazon, Great Investments Program only. alpeshpatel.com/links if you want to know more about that program. Disney, you're welcome. For a while, it wasn't doing anything, and now, there we go. And do you know what happened? So I looked it up. What the hell happened? Because I was on an airplane. I was in 3 different countries over the last 36 hours. And I looked it up, and what had happened? Do you know what I discovered? Something that I said they will probably do, and they did do. They'll mention AI, and they did. Well done, Disney. Don't forget, on YouTube, you have got a ton. I've not finished yet. Where do you think you're going? I've not finished. Why your pension fund, IFA, is destroying everything in your life. Okay. NVIDIA. Now, that'll probably continue. I got worried with NVIDIA, as you know, when it was here. So when it's here, I got worried. Okay. As you know, if you followed me, I got worried here. I got worried here. Because then this was falling. So I got worried this whole period. Wait a minute, Alpesh, you worry a lot about it. How come you're still in it? Well, because it never dropped X. So I could never sell anything. And for that reason, it just kept dragging me higher and making me more money. There are, in investing, certain strategies which are optimal and others which are suboptimal. Suboptimal would be things like trying to predict the future. Optimal is if it drops X, then sell Y. If it doesn't, you don't need to, which would keep you out of periods like this, which your fund manager cannot, because your fund manager is a congenital idiot. So is your IFA. Okay, so when this rises, that's all fine. They think they're clever. They're not. The market rose. When it falls, because they can't sell X, when it drops X, they can't sell Y because they've got to be holding something, and they get their commissions based on how much shit they can sell you. They will drag you all the way down. So you will have this rise you had, which took you 18 months, and in 8 months, you'll lose it all again and go back to the beginning. All right? And then they'll spend another year trying to get you back to where you were. So they've wasted bucket loads of your time. Like I said, they're congenital idiots. There's just no other hope for them. If you want to send this to your IFA, feel free. Also send them my LinkedIn, because they might say, who's this guy in a hoodie? Why should I listen to him? And then send them my LinkedIn, and it'll help shut them up. All right? Okay, good. Why is that happening? Okay, so we're going to go to closing that, and we're going to go back to this. Now, so that's Tesla. Meta is going to be great investments program only. So is ServiceNow. Oh, it's doing nice, is ServiceNow. This is why we hold for 12 months, because Intel since then has dropped off a bit. But that's why you hold for 12 months, as a general rule. That was one of our special situations. Netflix, popular with ye people, not one I own. Somebody said on TikTok, oh, you missed that one, didn't you? No, actually, I can't buy everything. And there's a shed load of ones which do rather well. So that's where we are with this, and that will probably at some point ease off. But if it drops X, I'll think about selling Y. It's not happened yet. I don't own it, so it's not for me to do anyway. But what I'm saying is that's the rule you'd have. And you can work out what, for every level of X, like if it drops 10%, 15, 20, and 25, you will sell. For that, it's definitely 100% by the time it drops that much from the high it's been since you bought it. All right, simple, simple, simple. And there's your Netflix. This is just going nowhere. Again, the team has drawn, because they're on drugs, they've drawn this like they did with Apple. I didn't ask them actually to do that. I don't know whether they're having an April Fool's joke with me. That ain't going to happen. That ain't going to happen. All right. Because that just flatline just shows you some of the bellwether stocks. They still go nowhere. Please, 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 on YouTube, have a look at my Why Your Pension Fails. I cover things like Scottish Investment Trust and Fundsmith, and why they're going to just not do what you think they're going to do for your pension. Million views on there. A top voice on LinkedIn, and a blue tick on TikTok. I know. The fact that I also happen to be a regulated hedge fund manager and a barrister and all the billion other things doesn't matter. Blue ticks matter. Popular with hedge funds, just continuing the education series on this. It's not one for me, and you can see it continues to do well. So I just covered other stuff just to show you there are other ways of doing things which I don't necessarily do. Now, Cisco, I said I actually did like. It's popular with hedge funds. It's not one that I own, but I thought, well, let's just have a look at what they're doing just for educational purposes, and you can see it's continued doing well. Okay. So there's that one. I told you about the blue tick on TikTok, so make sure you follow me there. And there on YouTube, you will see why your pension is performing poorly. And I cover a whole load of pensions, and it's on I've got a dedicated playlist to it. Okay. If you want to know where the YouTube is, alpeshpatel.com/links. And I'm also a top voice on LinkedIn alongside Mr. Gates. There we go, with lots and lots of reviews. If you want to leave a review, please do on alpeshpatel.com/links. There's a link where you can leave reviews. Thank you very much. Please have a look at my campaign for 1 million. It's to teach 1 million people how to add 1 million to their pensions over their lifetimes. You can reach 1 million people thanks to the internet, and adding 1 million more to their pensions is not actually that difficult. Thank you very much.